Thanks, Jay.
Thanks, Jay. Hey, everybody. Get this started. So what we want to focus on today is on these two projects, which are Avalanche native projects. So a lot of what we've been hearing about today, of course, and over the past few days is a lot of the Ethereum projects that have come on and what it's like to build on Avalanche. So we wanted to highlight these two projects. A little quick background. My name is John Nahas. I'm VP and Head of Business Development at Avalanche. So my mandates include growing out the Avalanche ecosystem, whether it's wallets, assets, applications, oversee a lot of the investments we do on behalf of the foundation, such as these two projects. So that's who I am, and I'll turn it over to these guys first and foremost, just to introduce who they are on a personal level so you can get to know them. JD?
Yeah, hey everybody, JD Gagnon. I am a co-founder of BENQI, which is a lending protocol on Avalanche. We also have a few other platforms under Rome Blockchain Labs, which we might get into later today. But yeah, Avalanche native projects for now, and excited to be sharing with all you guys.
Awesome. I'm Ed Mehrez with Aero Markets. We are the first option protocol on Avalanche, and we are absolutely original. So it's from the ground up. Love Avalanche. Going to be launching first quarter next year, and we will have our testnet up in about a month to a month and a half.
Awesome, Ed. You know, let's get in a little bit into the projects, and we'll start with you, Ed. Why don't you give us kind of the genesis of Aero Markets, what the idea was, and just some background on the application itself and what people can look forward to.
Yeah, thanks, John. So a little bit about Aero Markets. The main idea with Aero Markets is to bring the decentralization of market maker profits to the people. A lot of people don't know this, but it turns out that market makers and options in traditional finance make a killing. And it really requires specialized knowledge. First of all, when options market makers write contracts, when they make options and they sell them to people, they're on the hook for the liability that is created from that contract. Now, what they do is they hedge. So they don't have to worry about that in the future. So they hedge and they pick up the spread. And they do this over and over and over and over again. And they do it with leverage. And they make a killing. It's just absolutely insane. But, like I said, requires that knowledge of how do you hedge, how do you do it dynamically, and we're bringing that to our platform in the form of an AMM, so that stakers who are providing insurance to the protocol for being able to cover those liabilities that the options create will be able to share in the profits in good times, and will be able to take those spreads. So that's what we're about. And we're going to be doing it to start with. We're going to be doing, Avox, ETH, BTC, yeah, we're excited to be here.
When do people get to look forward to Aero going live?
Yeah, so we're going to be going live in the first quarter, probably January, February. But you guys should definitely check out our testnet, which we're gonna leave up even afterwards, because we want to get people involved in trading options without necessarily risking any money. We want to get people to really understand how options work. One of the main, I would say, drivers behind our UI UX concepts is to simplify how options actually work. We'll ask you a few different questions, and it'll basically be, where do you think the price is going to be? What's your target? When do you expect it to get there? And how much do you want to invest? And then it'll pick the right option for you. It'll pick the optimal option for you. In addition to that, we'll have a pro version for which people who are more comfortable with options will be able to trade.
Nice. JD, you want to give us a little bit of background on BENQI, kind of the genesis of that idea, what the process was like, where you guys are now, and where you're going to be going in the future?
Yeah, absolutely. So BENQI really was, the concept behind BENQI was to create a DeFi platform and turn that platform into a regulated subnet. So the concept there being, if we're regulated and we're KYC, AML compliant, then we're a good option for institutional participation, and it's a whole new era of assets that could come into this space. But in order to get there, of course, we need Avalanche subnets to be live, which aren't live yet, and there's a lot of development on our end still going on. But the first step is to get the DeFi platform products available on the C chain. So up till now, we have the lending protocol. We have somewhere between 2 and 3 billion in assets in there right now, which is pretty good proof of concept critical mass. In the next few weeks, which hasn't really been publicized yet, we're launching liquid staking, which really adds a ton of capital efficiency to the Avalanche ecosystem, allows for different types of risk and yield curve development. Very exciting. We're going to be launching fixed income products in Q1 and really creating a platform for building portfolios under the BENQI name. So a lot of exciting stuff going. But yeah, it really started as a foundational piece of Avalanche for DeFi to kick off. Obviously, lending protocols are one of the big foundational assets. So we've worked with Avalabs over a year now, getting ready for when the new bridge was live and Chainlink was available to have the lending protocol ready to go. And yeah, it's been a lot of fun. A couple of months we've been live now, so yeah, excited for what's to come.
Let's drill down a little bit on the liquid staking project. What does that look like, and why is that important, and how does that in practice work?
Awesome. So liquid staking on any proof of stake network is, right now, you have to make a choice. You have to take your AVAX and validate or delegate, which secures the network and leads to decentralization and all of these amazing things that we need in a blockchain network. But the challenge there is you have to choose either between that or using that asset elsewhere. And obviously, we want the ecosystem to grow, and so we want as many people as possible to validate and delegate, secure the network. But we also want them to be able to free up that capital for other activities. So you can have your cake and eat it too, I guess, so to speak. So it creates a bit of we call it a risk-free rate. It isn't a risk-free rate, of course. You still have market volatility of AVAX. But in this particular case, you would bring your AVAX to the liquid staking platform on BENQI. You would deposit. We have a decentralized, highly secure way that we're excited to share that would take that AVAX and then delegate it to other nodes that are operating on the network. In exchange for that, we give you a liquid token, so a representative token of your AVAX. And on BENQI, then you can come and deposit that, lend that asset, borrow other assets against it, essentially freeing up the equity in your AVAX. So you can use those assets then for other DeFi activities to create more yield, hedge your portfolio, whatever you might decide to do at that point. But it really creates a whole new dynamic of DeFi in an ecosystem. The challenge is, with liquid staking, of course, is security. It's a big potential point of failure for a proof of stake network if a lot of assets are tied up in a third-party entity and there's a risk with that. So we're working really closely with Avalabs. We have a bunch of auditors that are looking at the protocol now, and we're very confident we have an awesome solution. So pretty excited to let that out.
So you also mentioned you have fixed income products coming.
Yeah.
What does fixed income look like on DeFi?
Yeah, that's a good question. There's a lot of iterations of fixed income. It's definitely in its infancy, I think, in DeFi right now. It's a bit of a challenge because variable interest is fairly easy to achieve. Obviously, you can write algorithms that make sense to adjust interest as supply-demand changes. Fixed income is a little different. The idea there is we want to make sure that we offer hedging opportunities for options platforms. It's another foundational piece that a lot of secondary and tertiary DeFi can build on. It's a bit of a challenge. We have to try to create tranches of interest rates. That's probably the easiest way to explain it. Tranches of interest rates, and then people can build portfolios around different durations, different yields, different risk profiles. Platforms like Ed can hedge. They can hedge their options with fixed income products, and you can hedge a lot of your other positions. So again, from an institutional perspective, all of these things are building to critical mass in DeFi and a permissionless DeFi. And as we transition to a permissioned subnet, then of course it creates portfolio development opportunities for institutions, something that they're used to. That's kind of the key, is to get institutional assets in. We want to make it as close to apples as we possibly can, so it's not completely foreign and full of friction. So that's the goal.
Nice. We are here at Avalanche House, and you guys are going to be Avalanche native projects. I'll start with Ed. Why Avalanche?
Good question. So we get to ask this all the time, and we get thrown other layer ones as well to compare. I'm not going to do the comparison to other layer ones. I'm just going to keep it clean, and I'm going to say the reasons why in terms of the pure tech perspective. So one, being an AMM, being a DEX, it's really important that MEV is taken care of, that you want to minimize MEV. You want to minimize front running. You want to minimize all these problems that Ethereum currently has. Oh, whoops. Sorry. Okay, sorry. You want to minimize other layer ones, current problems that they have with their protocols that have a leader that creates blocks and that allows front running. I'm sure a lot of you guys have maybe heard of this, but it goes by the name of minor extractable value. So that was really important to us. A second thing that was really important, of course, is the fast finality, the transaction speeds. When you're hedging something, when you're actually going out there and looking at your exposures and rebalancing your portfolios, being able to do this faster is super important. Finally, the virtual machines that are coming on Avalanche, we're super excited for, because part of what our platform does is it needs to have a good idea of what the potential prices could be in the future. And this will actually turn out to be extremely important for any derivative products where there's a mismatch between when the asset is sold, the contract, and when it actually pays out. And believe me, in traditional finance, there are a ton of these, a ton, more than spot markets in terms of notional values. When you have something like that, you have to have a good idea of where the asset might go. You don't have to predict it exactly, but you just have to have some idea of where it's going to go so you can charge the correct prices. So something like that, though, you need to have an off-chain kind of component, or better yet, a virtual machine, something that can run something like neural nets, that can run reinforcement learning algorithms, something that in traditional markets they're taking huge advantage of. Machine learning, reinforcement learning, these things are absolutely huge in traditional finance right now. And bringing that, having the power to kind of bring that on a platform is very powerful, and have it be validated. So the virtual machine idea, and especially integrating that with something like Python, would be really big. So we're looking forward to that. That's a bit in the future for what would be capable on Avalanche. But we know the team. My background is I was a Cornell econ PhD. Knew Goon and Kevin. We know the founders. We know the rest of the team, and they're absolutely brilliant. And so, it's really important that you come to that. You come to a team that you understand what they're doing, understand the white paper, you know the people, and that they support you. That they're saying, okay, you guys are a DeFi protocol. We like DeFi. Some other chains aren't like that, and that's super important. Just that personal component as well.
I think you really touched on something important, Ed, and that's something that's sometimes lost on a lot of people when they think of blockchain and crypto. Everyone always thinks about a token or a price of a token or technology in particular. But ultimately, the reason these technologies exist is to help people, right? That's kind of the whole ethos behind it. It's a community. That's why we have, roping into this is why we have Avalanche House here, right? The purpose of this is to be here for the community, for the developers, but ultimately everything that we're building, whether it's on Avalanche or Ethereum or anywhere else, right, it's for people. This technology doesn't exist in a vacuum, right? It's not in a void. It's here to serve people. It's here to give power back to people, allow them to kind of utilize their own value. JD, why Avalanche?
Why Avalanche? Someone promised me I could drive that car if we developed a protocol on Avalanche. So it seemed like a good idea. I still haven't been able to drive it, but maybe today. But joking aside, Avalanche, our desire to build on Avalanche started, right when the white paper was released. It was fairly clear to us at that point that the technology we were waiting for, I think, to build a permissioned regulated subnet. At the time, we didn't know it was a subnet, but an ecosystem that ran on a very efficient blockchain hadn't existed yet. And so when we learned about Avalanche, started kind of connecting, talking to Goon, talking to Kevin, eventually talking to this guy, we realized there really was a future here for the product we wanted to build. So like I said, over a year ago, we started talking to the team, kind of strategizing how to get our products out into the marketplace when it was going to be ready for the use case that we had. And it's been pretty amazing. But I think, to sum it all up, the support that we've received from Ava Labs and the founding team and the tech teams really has been second to none. Trying to understand integrations or challenges that we've had, timelines, all of the things that are coming down the pipe in terms of how it impacts our protocol. That was kind of the first thesis as to why we chose Avalanche. Beyond that, of course, to build a permissioned subnet was a big consideration of ours. And on Avalanche, there's no restriction really on how many subnets you can have, how near infinite, I suppose, subnets you could have. And it still is incredibly fast. It's incredibly decentralized, even as we scale. So you can have an incredible amount of subnets, and it gets better and better in theory as the network grows. And for us, that was important. We didn't want to have to be limited in our options to create subnets, to create new subnets. And the value of the subnet for us is we can have jurisdiction-specific subnets, so we can abide by compliance rules and KYC, AML, all of the regulatory regimes in different areas. So our protocol can have essentially clones that are paying attention to and compliant with all of the different jurisdictional regulations, and that's critical to us. Another major feature that was unique to Avalanche is we can also have permission validation. And so one of the big kind of friction points for regulators right now is who's validating, who's securing, and who's perpetuating the network. And in most blockchains, you can't answer that question. It might be decentralized, but you can't guarantee that there's not someone from North Korea or Iraq or Iran or any of these sanctioned countries that are validating. And in our particular case on Avalanche, you can have permission validation, which is a huge asset for us, huge asset for regulators currently, at least in the current paradigm, the opaque regulatory paradigm. But it gives us a solid footing with which to work with regulators and try to figure out what is the acceptable version of a regulated entity, regulated environment, ecosystem. Avalanche was just the best option for us.
So you talked a lot about kind of regulated markets, bringing certain aspects of DeFi. So let me take a step back. We hear a lot about, TradFi or institutions wanting to get involved in DeFi, right?
Right.
Usually it goes this way. You guys are bringing DeFi back to the incumbents,
right,
and are doing that. This is kind of ironic, not ironic, it's been a long week, that we're sitting here on a Saturday. Today's Saturday, right?
Yeah.
Okay, today's Saturday. On Monday of this last week, I was with JD and Ed's partner from Arrow in Los Angeles at the Medici conference. We were talking to a lot of institutional investors. There was a bunch of family offices, people that are curious about the space, right? So we're there teaching them about DeFi, Avalanche, other projects too that are launching. So I guess my question to you guys, Ed, we'll start with you, is, that was Monday in LA dealing with institutions. 6 days later, we're in Lisbon talking, during more of a DeFi crypto-centric crowd. What do you see what do you guys see as the highlights of that crew, or any value they bring or don't? And where do you see here, and where do you see the last panel is about bridges, right? So I guess my question is, what does the bridge look like between TradFi and what's happening in DeFi right now?
Yeah, absolutely. There's a few different ways, at least in the options space, that this could happen. So despite the fact that we are taking something that does go traditionally to option market makers and distributing that to the stakers, we also have the fact that we are offering options on a completely new space. And we, in terms of access, we want to have this be a regulated environment where we can ensure that settlement, where you do actually have to satisfy those liabilities, it is super important for us to be able to satisfy them in the future, which is why we have an insurance pool, that occurs on chain and it's transparent. So for traditional investors, for the big institutional players, the permissioned subnets are very important for this reason, just like JD was talking about. Because we can have it so that an instance of Arrow is deployed that satisfies the CFTC regulations, that satisfies the SEC regulations. And on these, that opens up the space then to a lot of institutional investors who are looking to hedge their positions. A lot of the time, they'll have some underlier exposure. Let's say they have exposure to Ethereum, to Bitcoin. How do you hedge it? Buy some put options. Those are cheaper for downside protection. So that's really, in terms of how the traditional actors could come in and use something like Arrow Markets. But at a very high level, it is those permissioned subnets that allow all of these players to be able to come in and use the platforms themselves. There's no reason that they can't use the platform. We want it to be open, right? We don't want it to be inaccessible to them. And at the end of the day, if we could help out, funds that are managing people's pensions, that are doing things like that, that's a net positive, right? It's a net positive for society. So yeah, that's a bit about it. There's a lot more, but keep it short.
JD?
Yeah, it's a bit of a loaded question. I think we could spend hours speaking on this topic alone. But first of all, I think our experience dealing with institutions in TradFi has really been first that they're really trying to learn. We spoke with guys from Goldman Sachs and JP Morgan and Citi earlier this week, and I think it was kind of surprising how naive a lot of traditional finance still is. But they have an incredible focus on trying to figure out DeFi, trying to figure out what the heck this is that we're all doing and how they can find a way to incorporate that into their business models and not be left in the dust. And so I don't believe personally, and I don't think us at BENQI believe that it's us versus them. There's no future in our view where DeFi just takes over TradFi and all these institutions die. Maybe in a utopian view, that might happen because there's been a lot of crap over the years that has happened, but I just don't think that's the future. So two things before I get into what's kind of the bridge look like between the two. Two things that I think are going to happen. One, it's not if, it's when regulation comes into the space. We all kind of are standing here hoping that the regulators don't do anything crazy, but it's going to happen. It's just a matter of when. So our view is let's participate in that conversation. Let's try to have a voice in the regulatory design so that we don't all end up as a space one day getting slapped with regulations that we just can't adhere to. So that's the first step, I think, or the first belief for us. And the second belief is we don't think we're going to completely displace TradFi. It's not, again, us versus them. It's, in our view, it's a bit of a 1 + 1 is 3. So TradFi has a whole host of products. Obviously, I'm speaking broadly. And DeFi now has brought a new dynamic, a new type of yield, a new type of risk profile, a new type of global opportunity that if we work closely with traditional institutions and the incumbents, we actually create more robust portfolios. We create more opportunity for yield for investors and participants globally. And I think what we're seeing now in the space is really kind of the early adopters. It feels like we've been here for a while, but we're still kind of at that early tail of the curve, where it's early adopters, there's a decent amount of friction, there's a lot of risk, there's a lot of uncertainty. The learning curve is pretty crazy still, even to use protocols like ours, which were designed for user experience. And I think when the traditional institutions come in, that's going to bridge, so to speak, a lot of users that otherwise wouldn't have had access to the things that we're all excited about, DeFi and the yields and getting rid of a lot of the kind of fat in the middle of certain activities and protocols. And so it just makes sense from our position to work towards that future, to create a frictionless engagement, kind of a synergetic relationship between us and traditional finance. And that's, whoa.
B wants to be a star, right?
He was crazy, yeah. And so that's really been our focus, I think. And a lot of protocols talk about bringing assets into the space. Of course, that's exciting. We want to bring assets into the space, more assets, more locked value. It kind of creates a little bit of, I don't know the best word for it, but it kind of creates a velocity, I guess, of capital. But for us, it's also what can we unlock from DeFi out into TradFi? Because we all know that we need to use fiat still. As you accumulate assets inside of DeFi or as a business, how do you then utilize those assets in ways that you would in the real world? Real world being the fiat world. And so being able to cross-collateralize or being able to build facilities to connect directly to TradFi technology stacks is a really important focus of ours, so that you can take your assets as a business or individual inside of DeFi, and you can collateralize those in a simple, permissionless way in some ways with your TradFi activities and your fiat activities. And going forward, that's a huge piece of tax planning, a huge piece of business planning, financial planning, and very important. So we think it's not so much us versus them, it's really how can we work with them to create an environment that is a better option for users globally over time.
Yeah, and JD, I just wanted to add to that, it's super interesting when you are thinking about the clients, who are the clients of the institutional investors? A lot of the time, we come from this background where we're like, it's us versus them, right? DeFi versus TradFi. But institutional investors do represent a huge portion of the population, like the pension funds, that would not have otherwise had access to DeFi. So yeah, they take a cut, right, when they invest in protocols like ours and things like that. But at the end of the day, would those people, would the pensioners, would people like that actually be participating? Probably not. There's a huge barrier to entry in DeFi. That's knowledge. It's what all of you guys have, right? We're fortunate to have that, but not everyone does. So, yeah.
I think something that's often overlooked, just on a personal level too, is I agree. There's always this us versus them, this versus that, but a lot of times people overlook the fact that a lot of institutional money is actually people's money, right? It's not bankers' money. Bankers are using your money, but you are flipping kind of the coin on its head, right? Whereas they used to be the gatekeepers. They used to be the ones in the knowledge. They used to let you know what you can and can't do with your own money. The paradigm has shifted, right? We are the ones setting the stage now. You guys are, and everyone that's building DeFi applications, they're the ones coming to us, but we're not barriers to entry. We're not gatekeepers like they are. We're actually the ones teaching them probably the right way things should have always been done, right? That's kind of, in my opinion, the ultimate goal, is this is not going to replace this and this is not going to crush this. Ultimately, hopefully there's some way the innovation that happens here and around it by all the builders starts to influence it better. Because if it doesn't, ultimately it'll fall, right? Like there's going to be a time that comes where change is going to have to happen. They're going to hold on to as much power as they can for as long as they can. But until that point, they either need to innovate or die. So that's kind of where we see it. Going from there, I guess I'll ask you guys, we're in October right now. Where do you guys see the space? Where do you guys see your projects and the space in general in a year? JD?
That's a great question. I think if I had the answer to where the space was going to be in a year, I might not be sitting here. I'd just be printing my money everywhere. But honestly, I think everybody talks a lot about the bull market and super cycles and where's Bitcoin going to go. And for us, that's not really a focus. I think for us, it's a 1, 3, 5, 10-year kind of time horizon, which is an eternity in crypto. But I think really important when you're building a platform is to say, okay, the space is going to exist in a number of years. I wouldn't be surprised if in the next year we do see some attempts at regulation of some sort. Hopefully, they're not overreaching, they're not overarching, but I think speaking with a lot of global regulators, it's a huge focus of theirs, trying to understand the space. In the United States, Senate, Congress, everybody's having hearings, the White House. We were speaking with Andreessen Horowitz and their head of policy, is spending weeks upon weeks at the White House just talking about crypto regulation, how to regulate blockchain. So I think that's definitely something we're going to see in the next year. How that impacts the markets, I wish I knew. If it was favorable and we were all going to be excited about it, then maybe the super cycle will actually happen. But if it's unfavorable, we just have to adapt. And I don't think there's anything that is a crypto killer or any of that stuff. I think all projects just have to be aware and adapt to it. In terms of what's going to happen with BENQI in the next year, I think we've hit a certain critical mass now that's really exciting. We have a lot of institutional partnerships now. We have a lot of institutional assets. It's really just building out the rest of the platform products for the next little bit, getting those to critical mass. Excuse me, and making sure that we have all of the ends tightened up, I guess, and security items figured out. And then starting to build on subnets. I think once subnets are released on Avalanche, that's obviously a huge focus of ours, a big piece of our value prop. So making sure that we get that development done and released. In terms of the market, I mean, it's anybody's guess, I think, at this point. Will it continue into 2022? I sure hope so. For all of our bags, everybody that's participating in this space, if this continues, we'll be really happy this time next year at Avalanche House in Lisbon again. I mean, the ETF was a big deal. There's a lot of institutional money, like I said, just starting to dabble. So if those floodgates open, could be a lot of fun.
Ed,
Yeah.
what's the next year look like for you guys and your opinion of the market in general?
Yeah, absolutely. So let me start like JD did with overall market. Yeah, if I knew where it was going, I would love to tell you guys. I'd be a soothsayer though, to be honest. But in a longer term vision, I think it's really important to keep in mind something that I always do as because I'm an economist by training, okay? And competition is extremely important to me in like my framework of mind. And I even think about that with respect to regulatory competition. So yeah, all right, US fucks it up, suppose. All right, oh, pardon my language, okay. US screws it up, right? And they're too harsh, right? There's another jurisdiction that will likely be more favorable. And then regulators will look around. It might take a while, it might take years. And they'll say, wow, look at that country. They really got it right. They regulated correctly. How can we be more like them? Now, there's frictions to this, of course, but I think it's important to keep in mind that just as JD said, we can evolve. It's not the end of the market. There'll be bumps along the road, almost surely, right? But you guys got to keep that in mind, that there is still, despite the outcome of what happens in the US, and we'll be working extremely hard to make it so that those regulations are favorable and that they keep the users in mind, keep the people in mind, that at the end of the day, hopefully competition wins out. So broad overall market view, yeah, good. Hold. Hold for possibly a long time. But I also think when it comes to the broader, more specifically, the Avalanche ecosystem, I think that we are going to see a bunch of composability. We haven't seen it to the degree that it's going to get at. So for example, I'll just give you one that ties into what we're doing between both of our protocols. With options, it's extremely important to be able to borrow, to be able to save and actually make an interest rate as well, like in fixed income products. That means that you can actually offer prices lower on options, give people exposure on either the upside or the downside, depending on what they want, and take advantage of those interest rates with the hedging engine in the background. Both the interest rates and being able to either borrow or lend the particular asset that you're writing the options on. And that's like a clear thing that already happens in TradFi. It's already baked into the system. And it's even though they're legacy, all sorts of legacy frictions in traditional finance, one of the things that they have gotten right is interoperability. They're very good at this, very good at interoperability. And the fact that we are decentralized, that we're making SDKs so that that developers can come in and people who want to be able to use these platforms at a more fundamental level can plug in and be able to actually embed these in their protocols is super cool. And that is not really an aspect of a lot of what traditional finance has. So I think that's really cool. I think that will be something that we're going to see more and more, composability of projects working together in that way. And you already see it in the Avalanche ecosystem as a whole. You see us, but at a social level, right? You see that the community is really cool. Like, between us, we're always propping up each other's projects. We're always talking about, people's projects and like, okay, this, how can we help you out? How can we do this? And there is that camaraderie since we're on the Avalanche ecosystem. Like, okay, how can we get the whole space to grow? And sometimes that's lacking in more traditional finance sectors. There's much more competition aspects. You got to keep everything closed, blah, blah, blah. We, on the other hand, are forced to be open. We're forced. So that it's really interesting, right? Like from the perspective of just thinking game theoretically, like an economist. We already have it all out in the open. Here's our code. Here's our contracts. And then that brings up, these opportunities to collaborate much more easily, much more seamlessly. So, yeah, bullish on that too.
I think you bring. I mean, you definitely bring up a good point, right? That we lift each other up within the Avalanche ecosystem. But I think there's a level of kind of, I don't want to say maximalism, but there should be competition, and competition is always great, and everyone needs to compete with everyone else to get better, to be better, to lift each other up. That takes it back, right? So projects within Avalanche need to help each other, right? Well, Avalanche as a player too in this space needs to be giving back. That's why we're here. That's why we're doing this. But ultimately, I see this on both sides of the coin, right? Is that people in our space, in this space, we've been in it for a while. So to us, it's everything. But we are still really early, right? It's still really small relative to the traditional markets. So yes, there's kind of ecosystems and communities within projects, communities within platforms such as Avalanche. But at some base level, we should all be benefiting and supporting each other and supporting the entire broader crypto and blockchain ecosystem, right? Because whether it's TradFi, whether it's regulators, whether it's whatever it may be, there's strength in numbers, and together, when we build together and support each other, we all do better. So yes, on a broad level, it should be there, and then you can get a little competitive as you get to the protocol level, and a little competitive as you get to the competitive dApp level, right? But ultimately, that was a great point. Are there any? I want to turn it over to you guys if there's any questions. Anyone have any questions for the teams over here? Nothing? Somebody? All right.
No one?
Yeah. Can we get a mic, please? Thanks.
Yeah, so I have a question regarding the AMM you're making.
Arrow markets, yeah, Ed.
Yeah, with options and all of that. So how much is it like, do you keep parts of it off-chain and do you keep parts of it on-chain? Could you talk a little bit about the separation there?
So yes, great point. Okay, so there's a lot of technical details in how it's actually accomplished. The on-chain and off-chain aspects, eventually what we want is to have it all validated, right? So to bring that on board, and that's where the virtual machines will kind of come into play once they eventually can handle something like Python. In the meantime, there are things that you can do. You could take advantage of some technologies like SGX. So SGX, for example, is an enclave in an Intel processor. So each Intel processor comes with a particular part where you can securely compute some code without it being corrupted. And Intel produces a report that cannot be changed by anyone but them. Okay, so you gotta trust Intel in that case. This is an engineering problem, right? You gotta do it in stages. But given something like that, you can at least do it trustlessly. You can say, okay, well, not completely trustlessly, trust Intel, and then these computations have not been tampered with, they haven't been corrupted, they were exactly from this code that's available on GitHub, okay? So, that's one way to be able to in the interim, before the virtual machines are available, to be able to kind of figure out how to bring those off-chain computations on-chain trustlessly. But the reason why we need them, just going back to a very, very high level, is because in option markets, the big guys, they're using neural nets. They're using, things that are much more complicated than just regular Black-Scholes. That's the famous option pricing one. And even Black-Scholes is kind of it's crap to program on Solidity. You can do it. People have done it. Still doable. But if you go much more complicated than that, and you try to program it in the main languages that are available right now, it's not good. You need scientific computing. And that's why you need the off-chain, resource that's doing computations for something like, let's say a neural network, for instance. So yeah, that's the main reason, because we do need to understand more about where prices are going so that we can understand how much we have to pay out and how to hedge properly.
Right, thank you.
Good
No problem,
question.
thank you. Good question, yeah.
Thanks for the question. Anyone else have any questions? In that case, I think we'll
Wrap her up.
we'll wrap it up. Special thanks to JD from BENQI and Ed from Arrow Markets. It's been great sitting and chatting with you
Thank
guys.
you.